Welcome to the First Property Buyer Show, your go-to podcast for expert advice, market insights, and real-life stories to help you buy your first home with confidence.
Well, welcome to the First Property Buyer Show, the podcast that is with you every step of the way in your property journey. I'm Emilie Lauer, a real estate journalist here at Momentum Media, the team that brings you the First Property Buyer Show. And today I am joined with another expert, mortgage broker at Finni Mortgages, Eva Loisance. Hey,
Hello.
Eva, how are you?
Good. Thanks for having me. I'm very excited to chat about buying a first property.
Yeah, and look, today we are going to talk about money, and I think it's a very important episode because the first hurdle we always hear when it comes to buying your first property is I don't have enough money, it's unaffordable, I need more of a deposit. You always need more money. So I wanted to have a chat with you about how much money do you actually really need when it comes to buying your first property?
Yeah. And I think there's a lot of misinformation, miscommunication about how much do you actually need. And I think the worst one is you need 20%.
Yeah.
And you hear that everywhere. And maybe, a long time ago, when your parents maybe bought the property, that was the case. And I guess that's the ideal scenario. But who these days can have, for their first property, 200K in a saving account? It's pretty unachievable for most people. However, that's not the case. There's so much more options than just having your 20%. So that's not true. So first of all, everybody, you do not need 20%. And I think today we'll just discuss really the cost of just going with your own money. But there is a lot of other scheme and government help and grants and a lot of things you can get, pretty much get in with zero.
Yeah, and that's definitely a little bit of a teaser because that's going to be the next episode, all the grant scheme here available in Australia. Now, Eva, when it comes to talking about money, you said you don't need your 20% deposits. So, I think one of the first things I'm always hearing when we talk about buying your first property is knowing your budget. And it's something that you can go online and start looking at properties. You put a range of price and you just have a very quick estimation of your budget. But how do you know how much budget can you really have?
If you're talking about borrowing capacity and what the bank is going to lend you, really that is for you to go and meet with a mortgage broker like myself to really check that out, because someone with the same income in the same situation might have a different capacity depending on how much they spend for food or clothes or their living expenses, if they have a credit card, if they've got a car loan, a HEX debt maybe from old studies. So that's very different for everybody. So that's the first thing to check. And then it might be like, I actually can do a lot more than I thought, or wow, it's going to be really hard. And then I need to readjust my expectation and maybe look in different markets, maybe buy your first property as an investment property. There's different things someone can do. And also depending on what type of property you're doing, you might be able to only have 5% deposit, maybe a bit less, or maybe 10% might be the ideal. So it really depends on each person's scenario. And that really should be discussed with a professional.
Yeah, so we're talking about deposit money. We just said it, like the 20% are not necessary, but is it better to have more deposits or is it better to have maybe like a higher loan and keep the money you would put in a deposit as, repayment?
Yeah, so I think that's quite, it depends on the time you buy the property. Let's say you were looking to buy your property just before COVID and you were saving for 20%. And that took you 3 years, the property price has gone up so much that you would have gone backwards and you still can't buy your property. It would have been great for you to just go with 5% at the time, maybe pay LMI, and that's okay. And your property value would have increased and you'd be fine, right? So there's an opportunity cost in waiting as well, because the market sometimes during the growth goes quicker than you in the saving rate.
LMI, lender mortgage insurance, yeah.
Yeah, LMI, lender's mortgage insurance. So when you don't have 20%, the lender will charge you a small, sometimes not so small, depending on the purchase price, a fee that is added on top of your loan. So you don't have to budget for that really. And that covers basically the risks of them lending you more money than 80% ideal.
So what about the market now? Do you need, what is in a way best or more, like appropriate in a way to have more deposits or going with a lower deposits?
I would go as soon as you can, because the property you're buying today, let's say for 500, tomorrow might be 520, and the day after 540, the RBA is likely going to cut rates. We might see some increase in the price range. So really, you can't save quick enough to keep the level of the market. So the quicker you can get in with a minimum amount of money, just get in there as long as you are comfortable with the repayment of your loan.
All right. It's very interesting. So look, when it comes about money to buy your first property, what are some of the money you need? So you need the money you're going to get from your loan, the money you're going to have to give for the interest.
Yes, there's a few things there. So really the first one is get your 5%, let's say, ideally 5%. Then there's cost of just buying the property, which might be LMI like we discussed, but that's not for you to pay right away, can be added on top of the loan. Stamp duty.
Yeah.
Right. So if let's say you buy a property for 500, that's roughly 18 to 20,000 in New South Wales. Can be a bit more, a bit less, depending on the state. We can discuss in future episode. There's ways to waive that.
Yeah.
Right. So that's 20K saved, let's say. There is obviously, if you've got 5% deposit, your loan is going to be 95% of your property value. You need to make sure, depending on the interest rate, that you can afford making those repayments. Really, the bank will check that on, making sure that based on your income, it's going to be fine. But you also need to make sure for yourself, well, yeah, I can spend less money on fun, but do I actually want to do that? And am I actually capable of not going out every Saturday night or whatever it might be?
And I think that's one thing that is important, especially for first home buyer to remember, is like you're buying a house, but you don't really want to compromise too much on your lifestyle, because the lifestyle is what you live in your everyday, and it's quite important for your well-being.
Yeah, correct.
Great. Now,
so, you might have a great income, but if you're not willing to put some of that towards, maybe paying the loan and have lesser of a good lifestyle, then it can be tricky for some people, for sure.
Yeah, it's all a question of choice and goals at the end of the day, yeah?
Correct.
Now, so we talked a little bit about, like going to a mortgage broker, knowing your borrowing capacity, the lender mortgage insurance, and a little bit about interest rates. Look, the 2025, there's expected cuts where the interests are going to go down. We don't know exactly how much, and only the RBA can know that. How can you account for rates moving?
Yeah, so I guess we probably, in a good way, at the top of the cycle. So if you can afford it today, you should be fine in the future. However, you should not get a mortgage thinking, oh, there's going to be rate cuts. I can't really afford it today, but I should be fine. You should be comfortable with what it is today, because we don't know. It could take another year before we see a cut, and really 0.25% cut is not going to be a huge difference.
Yeah.
It's not going to, suddenly make your life so much better. So you should be able to make the repayment as it is today. The bank always have a buffer that is applied to that rate. So let's say if it's 6.5%, they will assess you almost at 9%.
Oh, wow.
Yeah, it's a huge buffer. So they really make sure you're fine with whatever you're getting today. But again, if your lifestyle is different to what you pretending is on paper, what you can do on paper, you need to be responsible for that. So it's always good for people to actually do a bit of a budget and check, okay, what's my take-home income? How much do I spend here? How much do I spend there? It's quite easy these days. Your banking app can do that for you. Sometimes it's quite a bit of a revealing revealing experience to actually look at where the money is going, and then realize, okay, well, you know what, I probably can save a bit there, or that's really essential for me, and really work backwards like that. Most people would pay rent, so obviously you won't have to pay that again, and you can reallocate those funds. So there's lots to consider.
Yeah, look, the budgeting part is quite scary, I have to say. I opened my bank app the other day to see how much spending I have, and I think I need to cut down my coffee intake.
There used to be a lot of jokes about the avocado toast,
Yeah.
right? And at the end of the day, not eating avocado toast is not going to buy you a house. But once you do have the house, it helps you to pay the mortgage, right? So.
Yes. I mean, if you make the calculation, like all these avocado toast is about what, like $1,000, maybe $2,000 a year. This is not what gets you up to those.
No.
20% deposits.
No, it won't. But it will help you pay the mortgage during the year. So, and we know so much, and we can do numbers that making extra repayment to your mortgage every month consistently will shave off years of you having a mortgage, and that's the biggest savings you can make. Yeah.
And we're definitely gonna dive deep in this one very soon in our next episode together. Talking about cost, look, there are a couple of hidden costs when you talk about property, and those are costs that you, as a first home buyer, you don't know about them because you've never done it. Yeah, you've never done it, and it's not something that people actually discuss that much. At the top of my head, I think when you do buy a property, you gotta have to consider the strata fees that are applying each quarter.
Yeah, that can be a lot. So when you buy a strata title property, and I guess unit, as you want to call it, or sometimes villas or townhouse, there are strata fees. So the fees to manage the property on ongoing basis, and that can be $1,000 plus a quarter. And if you haven't considered that as a first home buyer, like it could be $5,000-$6,000 a year extra. Well, that's a lot.
It is a lot.
Yeah.
It definitely is a lot. What's the range of strata fee? Do you know?
Well, depending on the facilities in the property, if you buy a property that only has no lift, not much garden, not much happening in there, obviously the maintenance is a lot, lower.
Yeah.
If you buy a property that has a pool and a barbecue on the rooftop and a gym and beautiful garden to spend the weekend on, it can be thousands a quarter.
And this can, like significantly up the property price at the end of the day.
This actually doesn't really increase the price you buy it for. It could, right, if it's very fancy and all that, but you might buy a property thinking, oh, well, I got it for a good price and I can manage this. And then suddenly, bang, the strata just ask you for, another $1,500 at the end of the month. Some people argue a bit, oh, I didn't expect that. So when you buy a strata title property, just, I guess, ask how much, is it every quarter?
And do you have, because we know that there is also a strata report that comes in when you're buying. Yep. Is there any tips to know whether it's a good strata like management or?
Yeah, so strata reports are really hard to read.
Yes.
It's 100 pages. It's quite difficult. You would probably go back to the real estate agent and ask for advice. However, they are the sales agent. They're not working for you. So you'd get an answer like, oh yeah, that's fine. Yeah, there's a crack there, that's fine. There's issue there, but that's fine. Like you don't really get a good answer. That's why having sometimes a buyer's agent can help you to do that. However, the strata report is done by an independent party. So if you actually get into it, really read what's going on, you can get a good feel of, okay, well, it's running at a loss, or there is issue there. Some special levies might come up later, or there's actually special levies already on the property that I will have to pay. If you don't read that, you don't know.
And you mentioned a report that is done by a third party. Do you have to pay to do that report?
Yeah, so there's generally a small fee. If you're interested to buy a property, I think it's like $75 to $100 that you would have to pay before you actually even buy the property or put an offer in, just to make sure you know what you're buying. Same thing when you buy a house or a fully detached property. There's no strata, right? It's yours. So you would actually mandate somebody, property inspector, to actually go and check the property. Is it structurally sound? Is there issue? Is there roof leaks? Is there really to check what's going on there? So if you put a price on it and an offer, you don't buy it and then realize, well, actually, I can't live there. The roof is, or there's termites or whatever it might be, right? You need to check that. Same thing with pest. It could be dramatic if you buy something that is infected. Yeah.
And we know that there's a lot of pests here, at least in Sydney.
There are locations where like termites are a real issue.
Yeah. So pest is another extra cost that we need to...
So pest and building inspection generally are done together by one person. If it's a house, probably like $5,000 to $1,000. If it's a strata report, then it's probably $100.
Okay.
Not cheaper.
Yeah, a lot cheaper,
Yeah, but remember then you've got a strata fees to come and maybe strata levies in there. So it's just small cost there to add to it. Yeah, and again, you don't have to. You could just go and buy the property and hope for the best. I wouldn't recommend.
Yeah, so you kind of like you don't have to, but you kind of have to.
You just must do that. Like it's like the most expensive thing you're ever gonna buy. People spend hours checking phones online, comparing stuff, and then you're just gonna buy a property, not making sure it's fine. Like, come on.
Well, you need the peace of mind.
Yeah. You definitely need to check. Yeah.
What are some of the other hidden fees that first home buyer don't think about or don't know about when it comes to buying that first property?
Yeah, I think you need a buffer for when you do move in. Obviously, if it's not a brand new property, there might be things that are actually not working, things that you want to fix, things that you don't like and you want to change. So obviously, it could be very small things, or the tap's not working, or the light's not working, but it could be bigger things. So I think it's clever not to run on zero once you move in. You just have a bit of a buffer to fix all those issues that might come up.
So how much buffer would you need in terms of concrete numbers?
I don't know, I'd say a few thousand at
least. A few thousand, yeah. Which brings me that you also need like another extra few thousand to move house from your rental to
That's
your,
right. You need
to your
to
new
move,
property.
Unless you've got a truck and you can carry everything yourself. And that can be $1,000 easy too.
Yeah.
Easy.
I mean, our listener might be like strong people, yeah.
Yeah.
Good. Well, so that's another extra cost to take into consideration. Now, I want to talk about conveyancer. And so a conveyancer is basically like a lawyer, and they help you to basically sign the property and have that guarantee.
Yeah, so they will go through the contract with you, making sure there's no, hidden clause in there that's just saying, well, if you don't settle within this day, you're going to have these penalties, or just making sure everything is in order and that you can settle without too much issues. And if there is issues, that you're not penalized too much. So that is definitely something you must have. Like it's even an option. And that's between, I don't know, 1,800 to 3,000, depending who you're using, the issue that might come up, what type of property, and all that. And they will negotiate for you a lot of, back and forth with the other party. So that's a definite must.
That's a definite must. Now, talking about conveyancer, which are basically property lawyers, can they help you also, put in some clause within the contract when you buy, for example, let's say you buy with a partner or a friend just to protect your assets?
Yeah, so again, depending how you would purchase, it might be that you buy the property 50-50 with your partner, or 20-80, depending who's got more money or whatever it might be. It might be also some behind-the-scenes sort of contract that happens. So yeah, they can definitely help you with that as well.
And you do have to pay extra for that. That's
sometimes, yeah.
Yeah. Okay. It's a lot of fees, yeah?
Yeah, it's a lot of fees. But again, there are ways to minimize some of those, depending on where you're at with your savings and where you're buying. And yeah.
So let's talk a little bit about that. What are some ways to actually minimize those fees?
Yeah, so I guess comparing is a good one.
Yeah.
All right. If you're buying a property that seems pretty standard and it's pretty straightforward, 2 weeks finance, 4 weeks settlement, like there's not going to be a lot to really negotiate on. But if you're looking for, I don't know, look, I need a month to settle, or I'm an expat and I need more time to do things, or whatever it might be, or you might have some delays for whatever reason, then you need maybe someone that really is used to different way of doing things. So, and compare, like, again, some lawyers are 1,800, some might be 3,000. You can check that. Paste and building inspection, if you get 2 people doing it from 2 different companies, obviously it would be more than if you find one that does all in one. That's another bit of savings. Doing a STRA report, making sure there's no special levy there might save you another, $8,000 because you didn't know this properly had a levy for, I don't know, a flood in the basement or things happen like that, right? Or crack in the wall or window leaking, whatever it might be. So I guess spending that money up front really avoids bad surprises later on.
Yeah, and that's a very, very good tip, actually. Is there any other hidden fees that we haven't talked about?
So I guess the LMI is one that people sometimes don't expect, but again, it's not something you pay up front. And there are ways, we discussed that later, to not pay those. Stamp duty as well, and that's one of the biggie there.
Yeah.
When you buy a property, that can be also waived or minimized, and that really is it.
Yeah.
That's that. There are the fees around it, and then obviously you have to pay your mortgage every month.
Yeah.
Yeah.
Which is the biggest one, I guess.
It's the biggest one there, yeah, for sure. Some mortgage brokers will charge a fee too.
Yeah.
When you apply, so just make sure that you know about that. Other than that, that's once you go through all that, and I guess to start in property, you probably need 25-30K. That's really the minimum. If you go without any of the schemes, then you're good to go.
Great. Eva, when it comes to like finding a great mortgage broker, because that's the first step, you should go through a mortgage broker. Do you have any tips of, like where should people look at? Because there's so many options available.
But look, they can come to us, finni.com.au, and book an appointment, and we'll definitely help them there. Otherwise, I think the main thing to ask is, when you talk to the broker helping you, is are they used to first-home buyers? Do they know about all the schemes there and grants that are around? And also, can they actually provide different strategies? And we discussed before, maybe reinvesting is one of them. There's lots available there, and sometimes people don't really think about, okay, well, I hear that you need to buy your first home and live in it, and there are other ways to do better. So maybe to have that discussion as well with your broker and see what they come up with.
Yeah, good. Well, it seems like there are a lot of costs associated with buying your first property, but in reality, it's not that much extra expenses, isn't it?
No. Look, if you actually put it together, you need your deposit, but other than that, it's pretty minimal. Just things to be aware of, so when it comes up, you're not like, oh, I didn't think about that.
Yeah.
And you do have enough to cover it.
Fantastic. Well, that's all we have time for today in our episodes of the first Property Buyer Show. Thank you so much for joining us.
Pleasure.
Eva.
Thank you.
Fantastic. Great. Let me do an outro. That was the first Property Buyer Show here, brought to you by Momentum Media, and we will be back soon with another episode. Bye for now.